To understand why gold and silver prices continue to rise, it is first necessary to clarify two critical concepts: the Federal Reserve balance sheet and the M2 money supply. The Federal Reserve balance sheet shows how much money the Fed provides to the market. In other words, it is a summary of how much the central bank supports the system through bond purchases and liquidity programs. The M2 money supply, on the other hand, shows how much of this money spreads into the economy. It includes cash, demand and time deposits, and money market funds. When the Fed's balance sheet expands, the central bank turns on the tap. But whether this money actually enters the real economy is determined by M2. If banks extend credit and money circulates, M2 rises. This strengthens inflation expectations and directly supports monetary metals such as gold and silver. By contrast, if the balance sheet expands while M2 does not rise, the money is locked within the system. This may be a sign of the next strong phase of monetary expansion. Understanding this distinction is critical for anticipating major moves in gold and silver. On the screen, you can see the Federal Reserve balance sheet. In December alone, it increased by $110 billion, meaning the Fed printed $110 billion. Now, when we look at the M2 money supply, as you can see on the screen, the most recent data shows that M2 increased throughout 2025. In short, when the Federal Reserve balance sheet expands and the M2 money supply rises together, there is a strong inflow of money into the system. This weakens the value of money, increases inflation expectations, and directs investors toward gold and silver. For more macro analyses like this, don't forget to like the video and subscribe to the channel.